right, good morning. It is Monday, June the 30th, 2025. Hope everyone had a nice weekend. It's fun. I guess this time of the year, like here in Charleston, you need to be going to either the beach or the pool. Kroll family yesterday took the kids to the pool in our neighborhood. What I thought was going to be about an hour turned into like a 4 hour day at the pool, so a pretty good shift. The kids were well behaved until my one son started. He's got the big spray gun, started spraying strangers all over the pool. So besides that, we had a great time. We hope you did as well. All right, late last week, we started mailing out our quarterly newsletter. We hope you enjoy that. A topic, which I always write those a month before they go to the editor and the printer and they get out to you, and I always have a little concern, like whether they will be relevant, right? Just as we know, events happen, things change, but certainly held true. So the topic of this quarter's newsletter, just how important maintaining temperament, having a good temperament many times is more important than intellect in terms of financial markets. So there obviously been a number of headlines through the first 6 months of the year here, and maintaining a healthy temperament has been really, really important the first couple quarters of the year. So all right, in other kind of headlines, so all eyes will be on the Senate and the new tax package that the president was hoping to have done by the end of this upcoming weekend, right? 4th of July, that was kind of his target to have this all completed. As we've discussed in previous week videos, so some opposition from Republicans, just concerns about the debt. Right, so it'll be interesting. Again, the House package had that state and local income tax deduction, $40,000. The Senate, is $10,000. So that seems to be kind of the one issue, the most important issue, I should say, in the difference between the two, just because that additional $30,000 of deduction. Potentially, you put that across all the millions of taxpayers. That's a big number, a big revenue difference in terms of the national debt. So we'll see the way that shakes out. Global financial markets last week, a great week in markets. All right, so the S&P 500, so U.S. large caps actually closed at a new high. All right, so S&P 500 up about 3% this year, which now even U.S. markets out of the negative. So S&P 500 now about 5% higher for the year. International markets last week up 2%. Now for the year they are up, depending on what part of the world, but roughly 16-17% higher internationally this year. And it's again, to tie it back in the quarterly newsletter, it's been challenging to maintain a healthy temperament. I mean, this year, of course, trade deals and tariff tensions, geopolitical risks, and you see all that kind of declining, at least up to now. We have a rising probability that the Fed is going to start cutting interest rates into the fall. At the moment, still pricing in 2 cuts. Right, inflation, PCE inflation last week, also another good inflation print, 2.3%. The revised GDP, gross domestic product, that number came in a little weaker than expected, which again, that would be in terms of what the Fed is looking at. That would be another incentive for the Fed to cut. So we'll see. This week we get the employment report for the month of June. Okay, so usually the employment report is released the first Friday of the month, but given this Friday the market is closed for 4th of July, it's being released on Thursday. All right, so Thursday we will receive the employment report for June, which that's always interesting, seeing if these higher interest rates, if they will, or you could argue again tariffs, whatever, will that at some point put pressure on the employment picture, which has just been remarkably strong in the last handful of months. So with that being said, wishing everyone a happy 4th of July weekend up ahead here. Questions, comments, concerns, please don't hesitate to reach out to our team. And we hope you have a wonderful week. Thanks.